Hey guys, welcome to Make Money Count. Big podcast today because it's the last podcast before the Bank of Canada makes their announcement next Wednesday, the 11th of December.
Yeah, December 11th.
Yeah. What do you think's going to happen?
50.
50? The big 5-0? I think so too. I mostly think so because you said so. No, I'm joking. I really do think. I don't think we have a choice.
Well, I think we do have a choice.
Yeah, of course.
I think there's a strong argument that could be made for 25.
Okay.
Stephen Poloz just got quoted, former governor of the Bank of Canada, and he believes Canada's in a recession,
Right.
like a full-on recession.
Right.
And the only thing masking it is the population growth,
Mm-hmm.
which you would think would be an argument for 50.
Mm-hmm.
However, simultaneously, he's saying we're still at quite a risk of stagflation, which is a very horrible economic word. I found like a really nice little infographic. I actually have two good infographics today that I want to use. One infographic is the stagflation one, which we will pull up here for you. But it's basically just stagflation is a situation where your GDP, like your country's economic activity, is shrinking. Unemployment is rising.
Mm-hmm.
Demand for goods is falling because unemployment is rising. And simultaneously, inflation's going up. And I mean, the reason why he cites that is if Trump imposes tariffs on Canada, we're going to be in an inflationary period, which is just going to be so difficult for the Bank of Canada to navigate with its simple one instrument of like, me Bank of Canada, me increase rate, me decrease rate, right?
Yeah.
So it's going to be, listen, I don't think that we're going to see Trump impose tariffs on Canada. I think a lot of it is bluster. A lot of people liked my analogy, by the way, the
peanuts?
The poker player analogy. But it really is like Trump is playing poker. He's been negotiating things all his life. I don't know that he's necessarily like a great negotiator,
Right.
but he is, boastful and full of bluster.
I think what makes him a great negotiator is that he's crazy, right?
Like, I don't know if he's crazy, right? Like, I think he's an egomaniac and self-serving and like wants to be viewed as a successful, popular president, right? But I think that imposing tariffs on Canada isn't going to get him where he wants to be, right? Because a lot of the states in the United States have Canada as their major trading partner also.
I mean, we could be a state soon, apparently.
Again, boastful, bluster, bullshit
Yeah.
that is going to upset a lot of people. That upset me.
Yeah,
Like, that pisses me off.
Did you see there was like a picture of him like standing on the he posted it on Twitter or
Yeah.
X, whatever.
Yeah, like
It's a bit silly. Yeah.
it's crazy.
Yeah.
Yeah.
Crazy.
Yeah. Well, he's not crazy. Listen, crazy's subjective, baby.
Yeah, it's true. That's true.
Like, we're crazy.
Yeah. 100%.
So, you know what else is crazy? Is the bank profits for 2024. Segue. Okay. So, we did this last year. We did this the year before where we talk about bank profits. Unfortunately, a few of them don't come out until December 5th, which is tomorrow, which is when we're going to be posting this video probably. But we got a bunch of them so far. High-level numbers, the things that I like to look at when we look at banks, okay? We live in Canada, everybody. We're sweet, we're smart, and we're fair. And we got some banks that take advantage of that. And I remember we did an ad campaign over COVID, and hopefully we can find a picture for you to put up. And the whole ad campaign was, while everyone was struggling through COVID, the Canadian banks earned $40 billion in profit. We have 40 million people in Canada. They made $40 billion in profit. That's $1,000 per person profit. Fast forward to 2024, we've got most of the banks having reported already. I think we're waiting on TD, Bank of Montreal, CIBC. I don't want to look down at my notes because I don't want to break from looking at you guys right now. profits are scheduled to be between $55 and $60 billion. That's a lot more than they were during COVID. It's like almost $1,500 per person. $1,500 per man, woman, or child in Canada is going towards the profitability of the Canadian banks. The Canadian banks dominate on an international scale because of the fertile ground they have here at home. And I just want you to be cognizant of it when you go in to negotiate with your bank. The banks thrive on something called not sucking your blood. Net interest margins. The healthier the bank, from an investor's perspective, an investor being someone who's going to buy that bank stock, the healthier the bank, the bigger the net interest margin. The net interest margin is the difference between the amount of money they pay you for your deposits and the amount of money they charge you for the money you're looking to borrow from them. Remember, the bank is just a vessel, right? It holds your deposits and it lends money to you. Those net interest margin numbers are constantly increasing. And for our Canadian banks, they range from like 2.5% on the high side to like 1.8% on the low side. And it's those net interest margins that are fueling this profit growth, especially at a time when there's no deals happening. Like Royal Bank of Canada, for example, and again, sorry I had to break to look at the numbers, but there's a lot of numbers. Royal Bank of Canada had a quarter where they made almost $5 billion in profits, 4.4, and they had made 1.6, almost 1.6 of that was just made off of personal banking. So just Canadians banking and Americans, because Q infographic number 2, the Canadian banks are among the most powerful when taken on a scale of all North American banks. I think we're like number 5 and number 6, Royal and TD. JP Morgan, Bank of America, Citibank, Wells Fargo, Goldman Sachs. Mm-hmm. And then number 6 and number 7, Royal and TD. Morgan Stanley hops in there for an appearance at the number 8 spot. And you know who the number 9 and 10 are?
Scotiabank.
Yeah.
And BMO.
Yeah. Want to try to shoot for number 11?
National Bank? No.
CIBC. Listen, National's making its way up. National just bought Canadian Western Bank. Like, they are a very, like, National Bank's got to be the smartest run bank in Canada.
Right.
Maybe Equitable Bank is actually the smartest run bank in Canada. But when you look at these numbers, it just shows you this massive strength that the Canadian banking system has. And you don't have a chance. Like, we don't have a chance. Again, like, to fight this, you don't have a chance. So,
yeah, what else are you going to do? Who are you going to go to?
Yeah. Like, there should be, like, there's a mortgage broker, right? There's a role of a mortgage broker, which is, like, you know, clearly valuable to the consumer in that it presents options that, you know, normally the consumer wouldn't get access to. Like, how many of our clients call in and say, hey, I have a mortgage with CIBC. It's a fixed rate mortgage and I need to refinance my mortgage, or I just need to get out of the fixed rate mortgage and take a variable rate.
Right.
And they go and they ask their bank, and keep in mind, there's compression happening on those variable rates now. So variable rate mortgages are going to go from being prime -1 to prime -50.
Right.
And all that's going to do is going to increase the net interest margins for those banks. So keep in mind, we've been talking about this a lot. The likelihood of you getting a really good rate on a variable rate mortgage is going to continue to drop every single day that we move forward into lower interest rates. Understand that. Anyways, how many of our clients right now are calling us saying, I just want you to help me get a better rate with my existing lender because I don't want to move my mortgage.
Yeah.
And then once we get involved and start dealing with their existing lender, okay, sure, yeah, we can find you the prime -1.
Yeah.
Listen, your bank doesn't want to help you. They're not going to want to give you the thing that you ask for right away. They want to push you right to the limit until they think you're leaving, and then they're going to offer it to you. A lot of times, they do it when you request the mortgage discharge statement.
Which is the most frustrating. And should be frustrating for the client too, right?
But really, when you think about it, it only costs $500, right, for the statement?
Yeah.
Customers should just start the negotiation by being like, give me the mortgage discharge statement. Like, go nuke right away. Like, boom.
Turn the keys simultaneously.
Oh, hi, Justin from TD Bank. You've got me in a 5.4% 5-year fixed rate mortgage, which you fed to me when you knew rates were going lower and you told me was a smart decision. Now I'd like to get access to some of the stimulus happening from the Bank of Canada and get a variable rate mortgage. Sure, no problem, says the banker.
Mm-hmm.
Your interest rate differential penalty is going to be 40 grand.
Yeah.
Okay, well, can we negotiate that? No. Can I get a better deal on a variable rate mortgage? Yeah, prime minus 50. Right? The only way you're going to change those two numbers, and those are big numbers, right? Think about it, right? If a mortgage is $1 million, the difference, that 1% difference is $10,000 after tax every single year. A $40,000 penalty to break your mortgage gets typically added into your mortgage. Like, that's just horrible, ugly debt. You have to treat your mortgage like a job. That's why people use mortgage brokers. Anyways, I kind of lost my train of thought there, but all I was trying to say was there should be brokers for any time you deal with the bank for anything. Oh, you want a checking account? I got a checking account broker, right? Like,
I'm getting smoked on my checking account. Smoked. And I've never not been smoked. It's kind of like being on those dating shows where like all the men are just terrible, or women, whatever, are just terrible, but you have to pick one and you have no choice.
Yeah.
You know what I mean?
Yeah. I remember I had a bank account with TD Bank, like when I was a kid. And the reason why I got the bank account was because they would give you $5 to wait in line. Like if you waited in line longer than 5 minutes, you'd get $5.
Really?
And there was a TD Bank very close to my high school at this plaza, the Richview Plaza. So I would walk over to the Richview Plaza at lunchtime. I'd wait in line. I'd collect $5 from the teller. I'd say I just wanted to check my balance. And then I would take the $5 and go buy either like a sub from Mr. Sub.
No way.
A slice of pizza from Pizza Pizza. This is like, whatever. I was in high school.
1960s
so
or something.
I guess I'm the old guy now, right? But it's probably, like 28 to 30 years ago. Man, I'm so old. Anyways, and sometimes I just deposit I'd be like, okay, I'll take the $5 and deposit it. My account was free. I got a free checking account. It wasn't because I was a kid. It wasn't for any other reason. It was just that's what they offered, a free checking account. And
that does not exist anymore.
It was a remnant from the time of Canada Trust.
Right.
Then I got a call kind of like when I started this business, maybe like 23, 24 years ago, and they said, we've changed your account. Like it's now $8 a month if you don't hit a balance. Mm-hmm. And I was like, that's interesting. Like, how do you do that?
Yeah.
Like I could have sworn that my account had no fees. Well, we changed it. And unless you can find the paperwork that you signed when you got that bank account that said that it wasn't
to prove
a fee,
them wrong,
you're screwed.
Yeah.
And that's when I thought to myself, I was like, it's just like you're never going to beat the bank.
No.
And they've changed the way that you can complain to the banks now. Like you're never going to beat the bank.
Right.
The best you can do is be well informed, and part of that being well informed is like, look how profitable they are.
Right.
Look at the net interest margins, right? Like each of these banks, like, okay, National Bank, which is the smallest of all the banks, but is working their ass off to get bigger, had a 27% increase in their net income year over year from last year. They went from being like $750 million to now almost $1 billion, which is huge, right? And that's for the quarter. And for 2024, they're almost at $4 billion in net income for the year, which is great. I mean, for a small Canadian bank and for one that's kind of breaking into this oligopoly that we've got here, right? 6 banks now. Right. Used to be like you'd say the big 5 Canadian banks. Yeah. But CIBC kind of continues to do poorly and National Bank continues to do really well. So now it's like there's like a legit 6. CIBC, you can expect tomorrow will come in with like a 6. I wrote some notes. $6 billion in profit and in excess of 2% on the net interest margins. Bank of Montreal, $8 billion in profit. I didn't get a number for the net interest margins, but I'm sure they're going to be higher than 2%. Scotiabank, unfortunately, and I know you're going to be broken up about this, Scotiabank's profit for 2024 is only going to be about 8.6. It would have been 8.6 billion, but they had to take a write down because of an investment in a Chinese bank, so they're going to be closer to 7.9 for the year. Yeah, it's too bad.
It's a travesty.
It's too bad. But you know what? The good news here is their net interest margins increased year over year, so they're making more money on their Canadian consumers, and that'll help them absorb the loss on a poor investment decision.
Right.
So if you don't think that there's bailouts happening every single fucking day, remember that the profits that the banks make domestically allow them to make bad decisions overseas. So when you see Scotiabank's pivoting in strategy and Bank of Montreal's made a different decision, or TD Bank got hit with a $3 billion penalty, just remember that one way or another, you're going to pay for that.
Yeah.
I mean, what else can I say, right? Like, the banks are making more money than ever. And this is in the face of really high interest rates, a really tough time for Canadian consumers. But they're not going to let that stop them. They're going to allocate some money to loan loss provisions. They're going to continue to take bets. They're going to continue to make money off the Canadian consumer. And it is incumbent upon Canadians to negotiate harder. And you know, honestly, even if you think you can do this alone and you don't need a mortgage broker and we're just talking about a mortgage for now, fine, but push them.
Yeah.
Don't accept what you're being offered. Because that net interest margin of 2%, on average, a low net interest margin for Canadian banks, 2%. That means that there's wiggle room in your negotiating.
100%.
And you know that the target when they're when they're giving you a rate offering is greater than 2%. So just push back. Same thing for mutual funds. If you're trying to buy mutual funds from your bank, or insurance, remember, like, mutual funds, there's different classes of shares of mutual funds, and they tell you just like Class A, the bank is going to make 3% on you. Class B, they're going to make 4% on you. Class C, they're going to make 5% on you. Ask these questions. First of all, don't buy a mutual fund, but ask questions, be well informed. I got nothing else to say. I always get frustrated about how much profit these banks are making.
No, I hear you.
And like in how much trouble the Canadian consumer is in right now. But they're just so well protected by the government. They're so entrenched in the fabric of Canada. Like, you know, everybody thinks Canada is this, like, again, what do we say, right? Canada is sweet, smart people that, you know, but we're not going to take that much, right? And I feel like at a certain point, there's a breaking point for people.
Right.
I don't think it's there yet. Maybe it's when the Canadian banks hit like $100 billion in profit, which at this stage is probably within the next 5 years.
The problem is, what's our what other choice do we have, right?
Well, I think the Canadian banks are kind of stifling open banking right now. They're preventing open banking from reaching a kind of critical point within the economy. But that's going to change. Like, there are companies like that Neo Financial out of Calgary, which is backed by the Thompson family, which is the by far richest family in Canada. I don't know, $60 billion. Like, they make the Rogers and the Weston family
look homeless.
Yeah, like yeah, like honestly. Anyways, so they're backed by the Thompson family, which means you know they're going to get some regulatory approvals. And they're valued at $2 billion, but the opportunity for growth is so huge as Canadians stop requiring a bricks and mortar branch to look at to have their money.
Right.
You can create a network. Like, look what Andrew Moore's done with Equitable Bank, right? Just incredible work. I'm sure their net interest margins are phenomenal, but I'm sure their efficiencies are also so much greater. So I think that you can't stop it for too long. I think, again, the problem is going to be, and this speaks to like why Canada isn't productive, okay? You have an opportunity to embrace open banking. You have an opportunity to embrace AI. You have an opportunity to embrace nuclear. I'd say if you just embrace those three things, you could jack productivity for the country, and Canada would pivot from being this like place of despair that it is right now, where everyone's complaining about like too many immigrants. Now we're not going to have enough immigrants. There's a housing shortage. Housings aren't
Yeah, my house price is going down.
house prices is falling, right? Like we're in a really, really weird situation. But if you start focusing on the things that will help you in the future, you don't worry about this stuff.
Right.
Turn the afterburners on and start focusing forward. Get a few bugs on the windshield, but like go fast and get shit done. Well, we're not going to do that with open banking. I can tell you exactly what's going to happen with open banking. Banks are going to keep it tight and closed off. Neo's going to sneak in there with some type of regulatory approval to start competing like Wealthsimple is.
Mm-hmm.
They're going to start amassing more and more deposits and growing, but they're going to be somewhat neutered against the power of the Canadian banks.
Mm-hmm.
Mind you, like, make no mistake, like Wealthsimple is backed by the biggest Canadian insurance companies.
Tangerine, Scotiabank,
yeah,
these kind of guys.
right.
Yeah.
But like, so there's always gonna. I mean, Tangerine got that's a long time ago.
Yeah,
but
yeah.
anyways, so the backing is going to be from insurance companies and well entrenched businesses. But the problem is, if you don't embrace open banking soon, then all that technology that can come around open banking, that can grow, that can create a hub in Canada for really good, well-paying, smart jobs, goes away, goes somewhere else. If you don't want to be innovative, you're not going to be involved in this stuff. And if you want to stymie growth with regulation in favor of entrenched players, well, then productivity it's not a fertile ground for productivity when you stymie growth using regulations.
Right.
So the playbook for this is going to be, we'll wait just long enough and we'll let the banks control things long enough that will stymie the growth in open banking. People will be innovating in other places. And then the smart kids that come out of school at the University of Waterloo will go to those places to work for those companies who pay taxes in those jurisdictions. And we will continue to stomp up and down and say, hey, that's not fair.
Yeah.
But the Canadian banks will achieve $100 billion in profit. And then we can all walk around like a bunch of fucking morons and say, well, the Canadian banks are all so strong and powerful.
That's a depressing outlook.
Well, we could change it.
Yeah.
We could change it. We could lobby for open banking. That would be one great start. Hey, we don't want to continue to be subsidizing the Canadian banks' worldwide ambitions. We'd like to have better competition for our mortgage rates and our savings rates.
Mm-hmm.
Like,
and I don't want to pay $30 a month for my bank account.
Yeah, right.
We're all fired up. I think we'll end it there.
Yeah.
And maybe we'll take it after we tell you not to like or subscribe unless you want to, which we're okay with. Maybe we'll just take it out with a slow clap for the banks.
Okay, bye everybody.